Hello and welcome students to my YouTube channel. In the last video lecture, I had explained you the users of accounting information of chapter number 1 of accountancy, that is accounting and its terminology. Now in this chapter, we are going to study the terminologies of accounting. Education can be obtained in various fields. In each and every field, suppose in doctor, being an engineer, architecture field, if you are a teacher, lawyer, then in each and every profession the different words are typical words are utilized for that particular profession. They are having their own specialized dictionary also. Suppose there is scientific dictionary also. That's why in each and every field they are having their own typical words that are utilized for that particular profession. That type of typical words that which are utilized for their particular profession, they are called as terminology. In the same way, in business also, in accounting, there are specific words that are utilized only for business sector or for accounting purpose, that are called the terminologies of accounting. So today we are going to study total there are 46 terminologies that has been given to you in your textbook. So in this video lecture I am going to explain half of it, that is around 23 to 24 terminologies that I have taken in this video lecture. So let's start with it without wasting the time. First one that is given in your textbook, that is business transaction. Exchange of product or service between two persons in cash or credit. We have already discussed that in business or only that type of transaction, in accounting only that type of transactions will be recorded which are having the economic benefit. It means which can be measured in terms of money. Now what is transaction? It means exchange of goods in return of money. Then that type of transaction, then that type of exchange of goods is called as transaction. Now we had already discussed that only economic transactions which can be measured in terms of money will be recorded in the books of accounts. Okay, now basically there can be two types of economic transactions, that is cash transaction and credit transaction. Now what is cash and credit? Already with the word cash you can understand that at the time of dealing or at the time of purchasing of goods, we have to pay the immediate amount in cash. Then it is called cash transaction. But at the time of purchase of any of the asset, suppose we have purchased the machinery for the business purpose, and for that we are not paying the amount immediately, but it is to be paid in installment or after a stipulated time period, say suppose 3 months or 6 months. Then for that time period, that transaction is called a credit transaction. It means immediate payment is not received, or immediate payment is also not to be done. Similarly, immediately payment is also not received. So that type of transactions in which the money is not received at the time of transaction, but it is to be received in future at a stipulated time period, then that is type of transaction are called as credit transactions. Now both cash and credit transaction, even though in credit transaction we are not receiving the money at that particular date or time when the transaction took place, but both are considered as economic transactions and they will be recorded in the books of accounts. Okay, next one comes, that is event. Now what is event? Situation or result created from transaction. Situation or result. Now due to any of the transactions, suppose goods worth rupees 5,000 has been sold to Amit. So this is one of the transaction. Another transaction, suppose I am giving example that wages paid rupees 500. So these are the two transactions, right? These two transactions, the result of that two transactions, you can see I am writing on the board, sale that is made of rupees 5,000, right? Due to sale, money is received to us, and on the other side we have paid wages, that is rupees 500. Wages we are paying, so that much amount of money we are paying. On one side we are receiving rupees 5,000 and on the other side we are paying rupees 500. So because of these two transactions, what the result occurs, that is profit is earned to the firm of rupees 4,500. It means actual amount that has came in the business, that is rupees 4,500. So this is the result. This is the situation that has occurred because of these two transactions. So this is the event, or it is called as a event. that is the result of any of the transactions that took place in the business. So at the end of the year, whenever you will study the chapter of final accounts, that we are preparing profit and loss account. So in that profit and loss account, during the whole year, whatever the expense or income has been made, that are called the transactions, and due to the effect of that expense or income, at the end we'll be getting the profit or loss in the business. So whatever the profit or loss we'll be getting, that is called the event. It means whatever the result that we are getting at the end of the accounting year, then it is called the event. Okay, so we have understood these 2 points. First terminology, that is business transaction, and the second one, that is event. Now moving on to the third word, that is capital. Okay, an investment made by the owner to commence the business. Basically, already we discussed there are 3 forms of business organization, that is sole proprietorship firm, partnership firm, and joint stock company. And now in case of any investment made by the owner, suppose to start the business, to commence means to start the business, to begin or to start the business, we require funds. Basically, you have studied there are 4 basic requirements to start any of the business, that is land, labor, capital, and entrepreneur. Right? So basic first thing, that we require the land, either of our own or of the rent payable. Whatever we require the land to start any of the business. Then afterwards labor. We cannot handle the entire business on our own, so we require the laborers to support in our business. Then afterwards, the third thing, that is capital. Capital means the fund, the money that is brought by the owner in order to start the business. Now in case of sole proprietorship firm, it is just called the word capital. But if it is a partnership firm means when there are more than one partners doing jointly the business, then that is called partnership firm. So in case of partnership firm, the word partners capital is being utilized. And in case of company form of organization, that is joint stock company, then it is called shareholders capital. So according to the business organization, the word capital also differs. Okay, again repeating, for sole proprietorship, the word capital; for partnership firm, partners capital; and for company form of organization, shareholders capital. Okay, so this is the amount that is invested by the owner in order to start or commence the business. Now the next terminology is drawings. When owner of business withdraws assets, cash or goods from business for personal use, it is known as drawings. Just as in capital, any amount that is brought by the owner, any amount means it can be in the form of cash, it can be in the form of goods, it can be in the form of any of the asset also. Suppose he is bringing his personal furniture in the business, then also it is considered as a part of capital. So it can be in any form. It doesn't mean that it should be only in the cash form. It can be in form of goods, it can be in the form of assets also. In the similar way, the opposite term of capital is drawings. Just as he is bringing the amount in the business, then it is called as capital. On the other side, if he is withdrawing that much amount of cash, goods or assets from the firm for his personal use, then it is called as drawings. See, again I am repeating, when owner of business withdraws, over here he is bringing, he is investing in the firm, over here he is withdrawing assets, cash or goods from business for personal use. It means in order to pay, suppose, the personal fees of his son or daughter, then that amount is called as the drawings. Okay, so it is known as drawings. Now the fifth terminology, that is liability. Liability means responsibility, the burden that has been created by the business, and that is to be paid at a future time period. Over here it is written amount. I have written short form AMT. Amount payable by business for credit purchase of goods or assets. Amount payable by business. It means at present, suppose we have purchased the goods on credit, and that amount we have to pay after 3 months. So at present it becomes our liability to pay that much amount of credit purchase of goods after 3 months. So that is called the liability. In the same way, suppose the assets. Suppose we have purchased any of the assets and that assets payment we have not done immediately, and after 6 months we are going to make the payment of that asset, then it becomes our liability to pay after 6 months. So these are called the liability, that is amount payable to any of the other party which payment has not been made at the current date, which is to be made after a stipulated time period. In that there are two types of liability, that is internal and external liability, and current and non-current liability. Now, internal liability and external liability. Internal word itself clarifies that it is within the firm. Suppose the owner himself brings certain amount of capital or extra funds, additional capital in the firm to start any new venture or new project, then that capital which he is bringing, that is considered as the internal liability because it is within the firm itself, right? And external liability means any of the liability which we have taken from the third party. Suppose we have taken the loan from the bank or from any of the cooperative society, or we have taken the debentures, then that becomes the liability, external liability, which we have to pay to the third party other than the owner of the business. So these are the internal liability and external liability. That depends upon the relation of the firm with those party who are giving the amount in as a liability. Okay. So these are called internal and external liability. Next comes, that is 7th point, current and non-current liability. Now what is current and non-current? Current liability, it means the amount which is to be paid within a period of 1 year. Then that is called current liability. Suppose we have purchased the goods on credit, then within a year, naturally within that current year, we have to make the payment after 3 months, 2 months or 6 months. So that is called the current liability. But suppose we have taken the loan or we have purchased the debentures, then that amount of debenture or bank loan, naturally it would not be for 1 year, minimum of 5 years or 10 years we have purchased, we have taken that loan, then that it becomes the non-current liability, the time period of which is more than 1 year, then that is called non-current liability. So current liability and non-current liability. The word current itself specifies that within the time period of 1 year, and non-current means more than 1 year. Okay. Now the 8th terminology, that is assets. As there are capital, in the same way there would be assets. It means economic resources which are held by owner and from which there is expectation of economic benefit to the business. It means any of the resources, naturally after involving the capital in the firm, after bringing the capital in the firm, we need some amount of assets in any kind of business unit. Suppose any factory we are setting up, then we need machinery, we need furniture, any kind of assets, stock. Then whatever the assets that we are purchasing, that are called the economic resources. What they are called? It means economic resources. We are purchasing any kind of machinery or any of the furniture, then that becomes our economic resources. And from that economic resources, we are getting the economic benefit. By utilizing the machinery, we are doing the manufacturing of the finished products, and from that we are getting the economic return. So that generates economic benefit. Okay, so assets, it means economic resources which are held by owner. Now the possession or the ownership of that asset is with the owner because he purchases those assets, he purchases that machinery or furniture, and from which there is expectation of economic benefit to the business. Now why we are purchasing those assets? In order for the economic benefit or for the profit of the business. So we are investing our funds into purchase those assets so as to generate economic benefit to the business. Next term, that is non-current assets. In case of non-current assets, there are tangible assets and intangible assets. Same way in liability, there were current liability and non-current liability. In the same way in assets also there are current assets and non-current assets. Now in non-current assets also there are two parts, that is tangible assets and intangible assets. First of all, let us understand non-current assets. Just as in current, non-current liabilities, same way non-current assets. It means the assets which are invested, the money in such type of assets are not purchased every year. Suppose we are purchasing the machinery, then every year will not purchase the machinery. That is one time investment for 5 years or say 10 years. Okay, so that are called as non-current assets. The such type of assets are purchased one at a time, and after 5 to 10 years we need to replace those assets and purchase new asset in place of the old one. So those assets, the investment is not made on regular basis in every year, then they are called as non-current assets. It includes the fixed assets. Now in that there are two parts. You can see the first one, that is tangible assets, and the second one, that is intangible assets. Now what is tangible? Tangible assets means which are having the physical form or physical existence, which we can see, which we can touch, that are called tangible assets. Suppose machinery, furniture, then that type of assets which we can see, which we can touch, that are called as tangible assets. But in case of intangible assets, suppose patent, copyright, trademark, these are the assets, goodwill of the firm, then these are the assets which we cannot see or touch, but their value is being marked in the business. So that are called as intangible assets. Now the words terminology that I've used, that is patent, copyright, trademark. Now what is patent? Patent means the right of the firm, that is the authorized right of that particular firm to sell any particular product. So and if that particular product has been registered in favor of any particular firm, then no any other firm is having the right to sell that particular product. It is considered as illegal. So that is called the patent right. In the same way, copyright. It means suppose any of the author has published the book, then no any other author is having the right to copy that same material and publish by his own name. So that is called the Copyright Act. And the third one, that is trademark. It means suppose there is any symbol, we can say Volkswagen or any of the shoe brands, or Audi, that we know that the four Bengal symbol is there. So that is the standardized symbol of that particular product, that is the brand. By seeing that logo only, you can understand that it is of the particular brand. Okay, so that is called the trademark. So if that trademark has been registered, then no any other brand can utilize that particular symbol or trademark while utilizing or while selling their own products. Okay, so these were the intangible assets which we cannot see, but they are having their valuation in the business. In the same way, I have utilized the word, that is goodwill. Now what is goodwill? Goodwill means the valuation of the business in the market. That idea of goodwill only we can get at the time of the selling of our business. It means while selling the business, what was the current position of the business in the market, how was our valuation, how was our dealing with the customers, that all reputation of the business is considered as the goodwill of the business. So these all goodwill, patent, trademark, copyright, that type of assets which we cannot see or touch, but their valuation is only being observed in the business, then they are called as intangible assets. Now up till here we have completed 10 terminologies of accounting. Now moving 10 and 11, sorry. Now the 12th one, that is current assets. Already I discussed that in case of liability there are current liability, non-current liability. Same in case of assets also, there are current assets and non-current assets. Now in case of non-current assets, we have seen there are two parts, that is tangible assets and intangible assets. Now in case of current assets, now what does current assets mean? Current assets means the assets that we have purchased for only a period of 1 year. It means it can be easily converted into cash after a year. Then they are called as current assets. Suppose bank balance, cash balance, debtors, bills receivable, stock. So if we are having a debtors means the amount which is payable to the any of the third party from whom we have purchased the goods on credit, then they become the debtors. And from whom we have to get the money, then they are called the debtors. So in future date we'll get the money from them, then that debtors will not be existing. Okay, so these are all the examples of current assets which can be easily converted into cash during a time period of a year. So there are examples, that is cash balance, bank balance, stock, debtors, bills receivable. These are all the examples of current assets. Okay, next one comes, that is liquid assets. Now what is liquid assets? We have understood current assets, non-current assets, current liability, non-current liability. Now what is liquid assets? All current assets except stock are liquid assets. Now liquid asset is a part of current assets. In current assets, whatever the assets are coming except stock, it means all other assets except stock are included in liquid assets. Okay, next one comes, that is real assets. Assets having market price or realizable value which can be easily converted into cash. Suppose machinery or any of the furniture, if we are selling in the market, then easily the realized value or the market price we can get from the selling of those assets. So that is called the real assets, which are having the realizable value, whose value can be realized on selling of that particular assets. So they are called as real assets. Now the next word that comes, that is fictitious assets. What it is called? Fictitious assets. Assets which are not having, it is opposite of real asset. Assets which are not having realizable value. Realizable value is zero, cannot be converted into cash. It can be real assets can be easily converted into cash, but fictitious assets cannot be easily converted into cash. Suppose there are preliminary expense, discount of share on debentures, discount on shares or debentures, then these are the expenses, advertisement campaign expense, then these are called as deferred revenue expense also. Here see, I have written fictitious assets, and over here and 22nd terminology I have written deferred revenue expense. Both are almost one and the same. The benefit of expense of such type is received for more than 1 year. It is suppose advertisement expense we have made. Suppose advertisement campaign expense we have made around rupees 5 lakh for publishing of the advertisement in the various gadgets or various in the newspapers or TV. Then that is called the advertisement campaign expense, and that advertisement which we have made, the benefit of that advertisement we are going to receive for next 5 years. So the total expense, suppose there is of 5 lakh, then in each accounting year will distribute in part of 5. So out of 5 lakh every year, so total expense, suppose it has been made 5 lakh for advertisement. For particular advertisement we have given contract to any of the firm, advertisement agency, and that has costed to us rupees 5 lakh. So that advertisement benefit we are going to receive, suppose for 5 years, right? So for 5 years, then total expense is 5 lakh, that will be divided into 5 years. So every year you will be showing the advertisement expense that is of rupees 1 lakh. It means the benefit of any of the expense that is deferred, that is divided amongst the years of utilization, then that is called the deferred revenue expense. That cannot be sold. That kind of expense are not having the realizable value, that are called fictitious assets. We can sell the machinery or furniture. Real assets we can sell out, but fictitious assets cannot be sold out. Okay. Next one, that is 16th terminology, that is receipt. Receipt means because of any of the transaction, because of the selling of goods, if money is received to the firm, then that is called the receipt for the firm. Okay, there are two types of receipt, that is revenue receipt and capital receipt. Now revenue receipt means the receipt or money that is received from the regular transactions during a year of the firm, then that is called revenue receipt. Suppose commission received by the firm, commission received by the firm, then money received on sale of the product on regular basis, then these are the examples of the money that is received on regular basis from the current activity of the business, then that is called revenue receipt, which are regular in nature. Okay, and capital receipts are those which are not regular in nature. Suppose we are selling the assets. After 5 years, the asset has become old or worn out, and we need to purchase the new one. So we are selling the old one. So by selling that old asset, we get the money. So that becomes our receipt, but that is called capital receipt because every year we are not selling the assets. So that type of capital receipt is not generated on regular basis. That's why it is called capital receipt. And the receipt that is received on regular basis, then it is called revenue receipt. Okay. Next one, same way as receipt is there is also payment. It means due to any kind of transaction. Suppose we have purchased the goods, then we have to make the, suppose we have purchased raw material for the manufacturing of the finished goods, then that is called the, we have to make the payment for that raw material, then that becomes our payment. Okay. Now, in same way in receipt there are revenue receipt and capital receipt. Same way in payment also there are capital expenditure and revenue expenditure. It means capital expenditure means as we are selling the old assets, in the same way we are purchasing the new assets. If we are purchasing the new assets, then it becomes capital expenditure because every year we are not purchasing the assets. We are utilizing those assets in our firm for minimum of 5 to 10 years. So that expenses which are not made on regular basis in a year, then are called as capital expenditure. In the same way there are revenue expenditure. Suppose we are paying salary, wages, telephone expenses, or if the property on which we are doing our business, that is on rent property, then every year or every monthly we have to pay the rent to that owner of the business or owner of that land. So these are regular expenses that we need to make to run the business, and that is called the revenue expenditure. Okay. Next one, that is deferred revenue expenditure, that is similar to the fictitious assets, that is divided for suppose 5 years, and every year that amount is written off from that accounting year. Okay. Next one, that is expense and revenue. Simple terms, that is expense, we are selling, we are purchasing any of the goods, or we are purchasing any kind of goods, then because of that purchasing we have to make any kind of expense for the business, so that becomes the expense. And revenue means whatever the income that is generated for the firm, then that becomes our revenue. So till now we have completed 24 terms or 24 terminologies of accounting. Still we have to go till 46. So nearly half part of terminologies that we have completed. Do revise again all these terminologies by referring your textbook together with the video lecture. That's all for today, students. Keep practicing. Goodbye. Stay blessed.